Hello everyone, welcome to the Ichimoku charts.com daily analysis for the US dollar Japanese yen FX for Tuesday, September the 29th. Well, we highlighted yesterday the potential for a change of trend, and we had a potential morning star reversal pattern. It's not, we haven't had confirmation of that. It's a, excuse me, that type of pattern is a 3-candle pattern. We need a large bearish red candle, the star candle, and then we need quite a substantial move up with a large green pattern that moves substantially into the body of the previous candle, and that hasn't happened. So we haven't had completion of that pattern, but we have had a change of trend. So we do have confirmation of the change of trend. And the significant thing about yesterday's star pattern was the very strong upside price rejection. Strong buying coming in as the market traded down to around the 88 level. And that meant that there was very strong potential for a change of trend. So we have had that change of trend. We have a green-bodied candle. The buyers have made some solid bullish progress on the day from open to close, and the buyers are keen because the close is above the previous close. The only problem for this market, excuse me, is that the buyers have lost control of this market. They attempted to take control, and they've only managed to close the market at the mid-range level, and they've lost commitment. So that is a little bit of a worry for this market at the moment. And the market found resistance at this flat Tenkan-sen, which is at 90.37.5. So there was selling pressure coming in. So we need to keep an eye on the low of the current candle for a potential reversal of the trend in the first time frame. If the market does trade up through the high with the continuation of the higher highs and higher lows, then we need to look to the Kijun-sen for potential support at 91.42.5. Failing that, there's a lot of support levels all the way up through here. This highlighted yellow area was an area of previous support and resistance, so there's very strong potential resistance up through there if the market does trade up there. And then quite a few swing highs on the way up, and then certainly at the top of the cloud or the Kumo. But we are still trading down below the Kumo or the cloud, which means that the market still has an overall negative bias. And the market is trading down below the Kijun-sen and the Tenkan-sen, which means that the market is bearish. And we still have failed to close up above either of those, and the Kijun-sen is above the Tenkan-sen, which means that the market is bearish. So still a lot of bearishness in this market. We need to look for a potential sell-off again with a lower high and a lower low, although we need to consider that this area here from 88 all the way up to 89.60 is a very strong level of previous upside price rejection, so the market will need to do a lot of work to trade down through that area.